Africa Business News, proudly sponsored by EY.
Coming up on Africa Business News, creating Africa's largest free trade zone, picking up the pieces at South Africa's power utility, and recommendations for the Petroleum Industry Bill. Stay tuned.
Africa, it is huge, it is diverse, and its business landscape fascinating and dynamic. And that's our business here on your favorite weekly African business stop. In Nairobi, we have Bonnie Tunya, who brings us the latest from East Africa. Christy Cole Popola in Lagos gives us news from West Africa. And joining me here in Johannesburg is Christine Mundo. My name is Victor Homoeswana, and this is the Africa Business News. Bonnie, digital migration is behind you in Kenya. Now you can watch television once again. The judges at the International Criminal Court finally abandoned charges against President Uhuru Kenyatta, although they refused to acquit him outright, implying that he could still come back for him if new evidence emerges. But our focus is on trade today, as 3 African economic blocs will merge to create Africa's largest free trade zone. What does this mean for the continent?
Thanks, Victor. Yes, 3 African economic blocs will merge into a new 27-nation free trade zone in an agreement to be signed in Cairo in June this year, with when the heads of states finally meet at that particular summit. But Victor, the deal will combine the common market for Eastern African, if you like, COMESA, the South African Development Community SADC, and the East African Community coming together. And what this means is that it will create a free trade union capturing more than 60% of the continent's economic activity, and investors will easily reach a market of just about 625 million consumers from South Africa to Egypt. Now, a preliminary program released by Sidiso Ngwenya, that is the COMESA Secretary General and Chairman of the Tripartite Task Force on the planned merger, indicates that the leaders of the 27 member states are expected to congregate on June the 10th to sign the free trade agreement. Now, Victor, SADC, EAC and COMESA have since 2008 been negotiating a roadmap to sort of merge into a free trade area with a GDP of about 1.2 trillion US dollars. And although the African economies are growing fast, Victor, second only to Asia, the continent has been attracted criticism over the slow pace of such integration efforts. So really, Victor, it remains to be seen exactly when this will happen.
Kenya has been busy on the international trade relations front, Bonnie, clinching a deal that I want you to tell us about. When I hear about Kenya and Japan deepening trade relations, I ask myself the usual question: which projects will Japan be supporting in Kenya, and in return for what exactly?
Toyota Shusho Corporation is gunning for a share of the tenders due to be floated by the government of Kenya in the geothermal energy sector. And this is not new for Toyota, because they've taken part in this. And the Japanese conglomerate, known for its automobiles, said it wanted to invest billions of dollars in Kenya's energy sector after successfully bidding and building for a 280 megawatts Olkaria plants. Now, Victor, the announcement followed Friday's meeting between the President of Kenya, Uhuru Kenyatta, and the Japanese Prime Minister Shinzo Abe at the Prime Minister's official residence in Tokyo. And this particular meeting yielded fruit because, Victor, you see, President Kenyatta is banking on foreign money to unlock potential in otherwise capital-intensive projects like geothermal and transport.
Thank you, Bonnie Tunya, coming to us from Nairobi in Kenya. Our next stretch sees Christine Mundo joining us to talk about some of the big stories in Southern Africa. Christine, first of all, Eskom. I thought we had enough of power outages. We were not going to hear about power outages, but then what do? They go and lay off or suspend 4 executives. What do you make of the suspension of especially the CEO just after 7 months in office?
You know, I think we were all surprised when we got to that press briefing, and that is what we were told by the chairman. But you're using the word suspended, and this is what we were all thinking. And until the chairman went on to say that it's not suspension, the executives are being asked to step aside so that this inquiry that has been launched, I suppose for prudence purposes. But
Can they perform their functions?
They can't.
And it sounds suspended to me.
And my question is, you know, why does the chairman remain, and why couldn't he not be suspended himself or asked to step aside? But it seems he said that that is left to the board to decide. But it comes at a critical time, and one just wonders. I mean, for instance, Midupi, that first unit is due to come on in a few months' time. Oversight on that particular project. I mean, power supply has been pretty much stable. There hasn't been any outages since then. But one just wonders about projects like that and how they'll be impacted.
Well, now tell me, we had President Edgar Lungu, the newly elected president of Zambia, in South Africa, treatment for, is it on esophagus or something like that, a narrowing esophagus, but he goes back to Zambia after he was discharged from the hospital. He's going to land in a real crisis there. Fuel shortages in the city, and I think in areas like Kitwe as well. Tell me about that.
And in the copper belt, and you can imagine what kind of an impact that's going to have on the economy. But you know, there are various theories as to what is happening. I was reading this morning, somebody saying the president is now blaming it on opposition parties trying to sabotage the government. But I think what is a plausible explanation is that one of the refineries ran out of a raw material that is used to process the crude. On top of that, there were delays in terms of bringing fuel into the country. But now we hear from the energy minister, who says that there is enough fuel to sustain the economy. The problem is that there is a backup at the refinery. So literally long queues of trucks that need to get back and obviously supply the service stations. We
saw that in Lagos not so long ago. But last week, standing right where you are, was Retesha Nand of Invictus Capital in Zimbabwe, painting a very rosy picture of the country. And I agreed with him for most of the things he was saying. But now, Zimbabwe coming under extreme pressure, the IMF telling them to pay back the loan. I mean, what is the prospect here? The trade deficit is widening, and now the IMF comes to them and says, you need to pay, because at the moment I think they're paying just over $100,000 a month, which is a token, because the billion or so loan that they have with the IMF is not going to go away that way.
One wonders, I mean, especially because the import bill continues to grow. I mean, this country continues to import everything from, you know, mealie meal to toilet paper, some $1 million a month spent on importing toilet paper. The manufacturing sector is shrinking. So the country heavily relies on imports. One wonders if there's going to be space to be able to increase that installment due to the IMF. But, you know, interestingly enough, you know, the country has become, and I don't know if this came up in your discussion, but it's become a sort of a trader's market. You've got the bulk of Zimbabweans coming to countries like South Africa, buying in bulk to take home to sell, and that's to sustain their livelihood. So in as much as it's the macroeconomics of it all, it's also that part of the sector that's killing.
Try go to Thohoyandou, Messina, or the northern parts of South Africa. You'll see exactly what you're talking about, the trading. Thank you very much, Christine Mundo. Next up, Christy Cole Popola in Lagos chats to us about West African headlines. Well, after 2 years of consideration, Nigeria's lower chamber is finally through with its recommendations on the Petroleum Industry Bill. We hear the 23-member ad hoc committee wants to strip the president of discretionary powers to allocate oil blocks, among other changes, of course. Are we about to see the calm after the storm of controversies that have trailed the PIB since it first came up more than 4 years ago? Christy Cole?
Maybe, maybe not. Now, I should remind you that, first of all, Nigeria's parliament in late 2012 constituted this ad hoc committee to look into the Petroleum Industry Bill and make recommendations on the acts that will provide for legal, fiscal and regulatory framework for Nigeria's oil and gas industry. Fast forward about 2 years later, the committee says it has finally tidied up that document, making recommendations on all 360 sections. Now, one of the most talked about is the committee's request for the withdrawal of the president's discretionary powers to award licenses or leases. And of course, the committee also wants to withdraw the Minister of Petroleum Resources control over relevant regulatory agencies. The committee is also asking instead that licenses should just be thrown open to bids. Also, the lawmakers desire to extend the coverage of the Petroleum Host Community Fund, which originally caters to oil-producing communities. Now the committee wants to extend that to all communities where oil and gas installations are located, is already generating reactions. The committee will present the report on the PIB to the Parliament when the Parliament reconvenes at the end of the month. That's on the 31st of March. Now, the reaction of the Parliament will determine if we are indeed about to see a calm after the storm of controversies, or if we are about to see another stretch of waiting.
Let's move further west into Ghana, though. The ink has hardly dried on the billion-dollar deal with the IMF, but As someone living in a West African oil economy like Nigeria, what do you make of the comments about the mismanagement of public perceptions regarding the nascent oil industry in Ghana? Is Ghana facing the same threat of oil curse like Nigeria, Christico?
I don't know if to say that's happening sooner than expected. I mean, it's only it's still less than 10 years since Ghana discovered its oil, but then it's safe to say that Ghana is experiencing the same thing that happens to African countries with oil, Nigeria being a common example, which is now still struggling with talks about revenue diversification after almost about 60 years after discovering oil. Now, analysts have over and again emphasized the need to manage oil resources as well as expectations of what to benefit from oil itself. The latest is coming from Ghana's chief executive of the National Petroleum Authority, Moses Asaga, who says Ghana's government has indeed failed to manage public expectations from its growing oil sector, leading to over-reliance on that sector. Ghana produces between 80,000 to 120,000 barrels of oil per day, compared with Libya, which produces 1.7 million, and Nigeria, which churns out about 2.2 million barrels. So arguments are that Ghana should maybe not expect so much benefit from its oil sector yet. Currently, Ghana is one of the top 10 producing oil countries in Africa, but then it is said Ghana must learn to use revenue from its oil sector to continue to support national economic growth, while of course keeping its options open to other areas of growing the country.
Oh, we'll see how that one pans out. That takes us to our trivia of the week, and we also get to hear more about the favorite stocks of Christy Cole and Bonnie. Stay with Africa Business News. If I had $10,000 to invest in your region, which stock would you advise me to buy and why? Let's start with you, Bonnie Tunya.
Well, Victor, this time round I'll go with the Brewers. East African Breweries Limited is where I'll put my money. The stock has gone up just about 1%. It's trading at a good price of 310. But the potential of this sector in the region, and not just Kenya, looking at Uganda, Tanzania, and Rwanda, is what makes it bankable for the future. So my money will go for EABL.
For a change, you're not in banking or in telecommunications. How about you, Christy Cole?
I'm still staying with the banks. They're doing so well in Nigeria these days, and it's the season for release of results. GTB's results were particularly impressive this time around. The release results which reflected impressive growth and profit, and they beat expectations, and dividend on the yield stock is definitely also attractive. So it's GTB. Okay,
a bank and a brewery in East Africa. In our trivia this week, I asked the Africa Business News team which island country celebrate what is known as the Sheikh Al Maruf Day on March the 18th. It is part of an archipelago of 4 islands.
Zanzibar?
Zanzibar, you're not too far off, is the Comoros. That's what you're looking for, part of an archipelago of 4 islands, although one of them, Mayotte, opted to stay under French control at independence in 1974. This day marks the anniversary of the death of Said Mohammed Sheikh, the great unifier and spiritual leader of the 4 islands. We're back with you next week with more Africa Business News. We thank Christy Cole Popola out of Lagos, Bonnie Tunya in Nairobi, Kenya, and earlier on Christine Mundo here in Johannesburg. Stay tuned to CNBC Africa. Until next week. Bye.